let's see the first transaction. Here we are talking about a new company. This company called Lavance Business. And this, what is the first transaction? Day one of Lavance Business was 1st of January last year. On this day, Lavance transferred $3,000. Let's say consider dollar or ringgit is not a big problem. $3,000 from her own saving. Lavance is the owner of the company, okay? She transferred from her own saving into the bank account she had set up for the company. Just the name of the company is called Just Kids at the local branch of a major bank. So this means this Lavance, she created the company. She paid $3,000 she put in the company bank account. The debit, it will be the bank, it will be in the debit side, and the capital will be the credit side. So how we can register this transaction? First, we need to put the date, which is 1st of January. Then we have to put the amount for both sides. The amount is, okay, we can put the amount first, or we can put the transaction first. So we can put debit. Our debit side is the bank. Then we have the credit. Our credit side is the capital. Then both of them are similar amount, which is 3,000. So like this, we can write the transaction by handwriting. We put the date. Don't forget to choose a date. Then we put, okay, first you need to put the date. You need to choose which one is debit, which one is credit. Then you need to put the account. When we are writing the transaction, you need to always to keep the first line, it's for the debit side. Second line is for the credit side. So when you are writing the transaction, make sure to put first the debit, second the credit. Like this is better and easier for reader. So when we are writing the transaction, we put first the debit line, then second the credit line. So this is how we write in the journal. So let's move to see how we put this transaction in the ledger. You remember we said in the ledger we have to open T account for each account we have used, right? If you see in this example, we have used 2 accounts, which are the bank If you see, we have used 2 accounts, which are the bank and the capital. So if you remember, we said we put the debit, the left side is debit, and the right side is the credit. So let's transfer this transaction. First side is debit bank, so we have to put it in the debit side of the bank, which means this we need to transfer it to the debit side of the bank, okay? So, but what we transfer, we don't transfer the bank itself, we transfer the other side of the transaction. So what we write here, we write 3,000 capital. Then this one, this is for the bank. For capital, we should transfer to the credit side. What we transfer to the credit side? The other account. Which means we write here 3,000 bank. Don't forget to put the date, which is 1st of January. I don't have enough space to write, so for that reason it's just a little bit messy, but it somehow looks like this. So this is what we call it, the journal, and this is what we call it, the ledger. So the journal, we put the debit, we put the credit, and first, better to start with the debit than the credit. Don't forget to put the date and to put the amount. Then the ledger, we need to open T account to each account we are using. So if you see, we open T account for bank and for the capital. How we transfer? First, we see the bank is in the debit. So we need to write in the debit side of the bank. What we write? The other side of the transaction. capital. The capital is in the credit, so it means we need to write in the credit side of the capital what we write the other side of the transaction. This is how we do journal and ledger posting. So let's go to the second transaction. The second transaction, to help start her business, Lavanda applied for a bank loan for $2,000, and on 2nd of January this was agreed and the fund deposited into her business bank account. Which one goes debit, which one goes credit? Bank debit, bank loan credit. That's right. So debit bank, credit loan. Okay, so debit bank, credit bank loan. Okay, so also we need to open the T account of those two accounts. If you see the bank, we already have it open earlier, so we need to transfer what we opened earlier. So we have bank and we have the bank loan. Okay, so the bank we already have earlier, we have this, if you remember, we have the 3,000 capital in the debit side of the bank. Debit and credit. So already we have the 3,000, which we have it earlier from the, which is capital. This is earlier. So now we need to transfer. If you see bank is in debit side, so we have to transfer the other side of the transaction to the bank, which is bank loan. The amount is 2,000. Okay. Then if you see, we have the bank loan is in the credit side, so we have to transfer the other side of the transaction to the credit side. So how it is, we write that bank, which is the amount 2,000, which is the bank. So sorry, this one it's 2,000, not 3,000. Okay, so like this, we transfer this transaction from the journal to the ledger, and as I mentioned earlier, this writing here, this is called journal, and those two T account called ledger. Okay, so this is the second transaction. Let's go to the third transaction. Third transaction, on 3rd of January, Lavanda purchased computer equipment for her business so she could advertise and take order using internet. She withdrew $2,000 in cash from the business bank account to buy the computer equipment from the supplier. She withdrew money from her bank account, from the company bank account, to buy computer. So which one is debit, which one is credit? So we will have the debit side, which is computer, and we have the credit side, which is the bank. Also, we need to open the T account for both. So we have the bank, and we have the computer. So bank, if you remember, we already have two transactions earlier in the bank. We should keep those transactions, okay? So earlier we have 3,000, which was capital. and we have 2,000, which was loan. So now let's take what we need to do from this transaction. If you see, the computer is debit side, so it means we have to write in the debit side of the computer. We transfer the other side of the transaction, which is, we write here the bank. The amount is, our amount here is 2,000, which is bank. Don't forget to write the amount of this transaction. Okay. Then we need to transfer what we have in the, okay, the bank is a credit side. It means we need to type in the credit side of the bank. What we take the other side of the transaction. Okay? So we type it here. We have 2,000 computer. Okay. In the 4th of January, Lavanda bought a small van for her business for 6,000. So she would be able to make deliveries to local customers. She bought the van on a credit from a local supplier called Van Hire Ltd. They agreed to repay in 24 monthly installments for $2,250 each. So this is no problem. Okay, she bought on credit. You don't need to check the rest of the details. She bought the motor van out of amount $6,000, and she bought it on credit. The debit is a van. Credit, we can call it accounts payable. Or what we can call also in another name, the name of the company, which is local supplier called Van Hire Ltd, like Van Hire Ltd. Okay, so we can either write accounts payable or we can write the name, and we should put the amount. The amount is 6,000. Okay, so this is the first part, which is how to write in the journal. Okay, this is how we write in the journal. So let's do now transfer this transaction to the ledger. Let me just a little bit give more space. So like this, we'll be able to draw easier. So you know that here we have two accounts. So we need to open two T accounts. So first, as you know, the left side is for debit, the right side is for the credit. So we have accounts payable, we have the van account, and we have accounts payable. Okay, so how we can transfer this transaction to the ledger? So if you remember, we mentioned this part is this one, we call it the journal. Sorry. And this part we call it the ledger. Okay, so we need to transfer the transaction. Van, it's in the debit side. It means we need to write in the debit side of the T account. What we should take the other side of the transaction. We transfer it to here. So again, if you want to know from which side we need to write, we want to see this account located in which side of the transaction. So you see the van is located in the debit side of the transaction. It means we have to write in the debit side of the T account. What we should write? We should write the other side of the transaction, which is 6,000, the accounts payable. So if you notice here, you can read the transaction from the ledger. Debit, van, so sure the other side is a credit, accounts payable. So how we transfer the other side of the transaction also? The accounts payable, you see it's written in the credit side. It means we have to write in the credit side of the accounts payable T account. What we transfer? We don't transfer it itself, we transfer the other side of the transaction. So what we transfer? This one was 6,000. So we transfer the van to the credit side of the accounts payable. Why we decided credit side? Because the accounts payable, it's already in the credit side. So we have to write in its credit side. What we should write in its credit side? The other side of the transaction. So we put here 3,000. Sorry, it's 6,000. So we put here 6,000, the van. So like this, we are transferring the transaction from the journal to the ledger. If you remember when we talk about the process of the accounting cycle, we said we have to record all the transaction first in the journal, then we have to transfer it to the ledger. So what is the difference between this one and this one? The journal, it has a series of the transaction, which is every day we do. The ledger, if you open a ledger book, you will see each 1 or 2 pages has a separate account. So here when we are writing, we are putting them together because we need to follow the transactions. But normally what we do all the set of the transaction in the journal. Then at the end, we open the T account of each account and we transfer to the ledger. Similar as you see in the previous example, I show it in the slides. But here in the handwriting, I'm trying to show you each transaction we are doing in the journal, how is affecting the ledger accounts. So the difference, there are a series, they should follow each other. This is the steps of the recording in the accounting. First step, you have to record all your transactions in the journal. Second step, you have to transfer those records to the ledger. Why we record in the journal? Journal, it will have the series of our transaction, each date with that specific date and the amount. We can see day by day. The ledger will show us the transaction account by account. So we can see this account, what are the transactions affecting it. When you go as a journal type, you will see those transactions are just a series following each others. But when you go to the ledger side, you will see that you will see this T account and you'll see what's happening to the bank during the financial period. What is increasing, what is decreasing, and all how is reflecting to the bank. So this is the difference between journal and ledger. Okay? Why I'm putting them here together? Just to show you each transaction, how is affecting the ledger. What is a normal process is we do all the journal transaction, then we open the ledgers in one shot. So we did this one, we still have another 5. Okay. So this transaction, 5th of January, Lavanda purchased children clothes for 4,000 from clothing importer Lavanda Ltd. And Lavanda has purchased the clothes with the purpose of selling them to customers to earn revenue. Clothing importers agreed Lavanda could purchase the clothes on credit. So Lavanda bought clothes on credit. Okay? So we go to the debit, which is clothes, we can call it, or we can call it like the inventory. And the credit, it's accounts payable. or we can put the name of the company, which is Clothing Importers. So this one, how we can transfer it to the ledger. Also, we need to open the 2T account. Which is the clothes, and which is the accounts payable. So we have debit, we have credit. Okay, try always to not forget to type the amount. So this transaction, the amount is 4,000. So, and always prefer that you name the transactions, so you name the accounts payable based on the company name, unless you have been asked to use only accounts payable. So let's do it this one as a closing importer. So how we transfer the transaction? First, which side of the clothes we put debit or credit. You see the clothes is in the debit side, so we have to write in its debit side. Closing importer, it's in the credit side. Then what we should transfer? We should transfer the debit part to its credit side. So we should write it like this. So here we put accounts payable, or we call it clothing importer. Which is 4,000. And here we put the clothes or inventory, which is also 4,000. Okay? Let's move to the transaction. Lavanda made her first sale on 6 January last year to her friends Anita and Ashok. They had 2 young children and liked the clothes Lavanda had bought from clothing importer. As they were close friends, Lavanda refused to charge them any more for the clothes than she had paid. And in total, Anita and Chuck selected clothes of $600 and paid in cash. So she sold amount of clothes in $600 and she received the money in cash. This one, it happened in 6 January. So we have the debit side is cash because she received cash. The credit side is inventory or clothes. The amount is 600. So we need to transfer this one to the T account. So we have cash, which is inventory. So as you know, we have to transfer like this. Okay, in the cash, we transfer to which side? Cash is written in the debit side. It has debit side. So we should transfer to its debit side, the other side of the transaction. Inventory is in the credit side. So we have to transfer to its credit side, the other side of the transaction. So we put like this. I think cash, we already have something we put in cash earlier. Let me see. No, we don't have. Okay. So we just put the cash, which is 600 in inventory. Inventory, if you remember, we already have transaction earlier in the inventory or the clothes, which is the accounts payable, the amount of 4,000. So we have the 4,000, which is the accounts payable, the previous transaction. Then we need to add here the 600 we sell in cash. Okay? So let's have that last 3 transactions very fast. 7 January, Lavanda received a request from Fun Day Care Center for young children to buy a selection of clothes from her inventory. Lavanda therefore agreed to the center to pay the cost of $1,000 for its first order. In addition, she agreed the center could take up the 3 months to make the payment. So now this payment is not happening directly, not happening in cash. This payment, it's happening on credit because he was given 3 months to pay. So the date is 7 January. He will take the clothes on credit, so the debit side will be accounts receivable. And the credit side, it will be the inventory or the clothes. The amount is 1,000. Then we open the T account. We open the 2T account. So we have the account receivable, and we have the inventory. So the account receivable, if you see it's written in the debit side, it means we have to transfer the other side of the transaction to its debit side. The inventory is in the credit side. It means we have to transfer the other side of the transaction to its credit side. So how we write, for the account receivable, we have to have here the inventory, which is 1,000. And here the inventory, actually we already have previous transaction. If you remember, we have the 4,000, which was the accounts payable. And we have 600 cash. Also, we have to put the 1,000, which is accounts receivable. So this transaction, a month later on 8 January, Lavanda was required to make her first payment of $250 to Van Hire Ltd. She did by instructing the bank to do. So she did by the bank, okay? So this transaction, it's in 8th of February. We have debit side and credit side. She paid by the bank, then the bank will be in the credit side. And she reduced from her accounts payable. So the accounts payable, which is liability, decrease, it will go to the debit side. The amount is 250. Then let's open the T account of those both accounts, both sides. As I mentioned, normally the T account, we will open it at the end of our recording. So first we do our journal, then we do our ledger. So our journal is, okay, we have, sorry, the accounts payable. And we have the bank. So how we do that, how we transfer the transaction, the accounts payable is in the debit side, so we transfer the other side of the transaction to its debit side. The bank is in the credit side, so we transfer the other side of the transaction to its credit side. So it will be like this. Accounts payable, if you remember earlier, we already have something written in the accounts payable, which is 6,000, the van, but this one actually, yeah, this is the same. Yes, this is the same accounts payable. So we have the 6,000 here. This is from earlier, okay? So now we put the 250, which is bank. The bank, if you remember, we already have also previous transaction were written in the bank. which were here, 3,000, 2,000, and 2,000. So now we need to write this transaction, which is the accounts payable. The amount is 250. Okay? So like this. The last transaction on 9 of February last year, Lavanda received early payment of 1,000 from the fund daycare. This fund daycare, if you remember, we registered as accounts receivable. So this is, she received this amount to clear its debit. Let's consider she received it as cash. Normally you should see, it should be written here whether it's cash. Okay? So how we record this transaction? It's in 9 of February. We have the debit, we have the credit. She received cash. So the debit is cash. The amount is 1,000. And the accounts receivable, it will be in the credit side because it's decreased. How we do this transaction in the ledger? We open the two ledgers. Okay, this one he didn't record here. So it's cash and credit accounts receivable. The amount is 1,000. So when we open the ledger, we have the ledger of the cash and the ledger of the accounts receivable. In your answer, please write the full things because here I don't have enough space, so I cannot write. So the cash, we already have some transaction in cash earlier, which was 600 inventory. So let's transfer this transaction, the cash in the debit side, then we transfer the other side of the transaction, the debit side of the cash, which we put that 1,000, which is account receivable. The account receivable, if you remember earlier, we have the 1,000. This one earlier. So how we transfer this transaction? Our account receivable is then the credit side. So we transfer the other side of the transaction to the credit side of the account receivable. And we put cash 1,000. Okay? So like this, we have here the transaction, how we put it in the journal and how we put it in the ledger. So keep in your mind that this part, it's called journal, and those called ledger. So let's start with our exercise. If you remember, it was Amina opened a laundry shop. And Amina opened the laundry shop on September 1st, 2016. During the first month of operation, the following transaction occurred. First transaction, she invested 20,000 ringgit cash in the business. Okay, we put September 1st. We put the amount, which is debit, cash, credit, capital. Also, by the way, you can write the amount from the other side. You can write the amount here or you can write the amount here. It's up to you. So if you want to write the amount from the other side, so it will be like this. So 20,000, 20,000. Some people, they put like here, like columns, debit and credit. Okay? So like this, you can write the transaction. Did you see how we can write that transaction? So like this, we can write our transaction in clear. We need to put in the transaction the amount in our transaction. We need to mention the date. We need to mention the debit side, the credit side, the amount. Those are the items which we have to include in our transaction. As I mentioned, like this, we write our transaction. We put the date, we put the debit and credit side, and we put the amount. Those items are very important when we are writing our transaction in the journal. Let's go to our second transaction, which is paid 1,000 cash for store rent for the month of September. Because if the expense increase, it goes to debit. Okay. What about the cash? Rent expense increase, so it's in debit, and cash decrease, so it goes to credit. Very good. Very good. Thank you. I'm always asking you because you need to keep these things in your mind. You need to keep these things in your mind to be able to analyze any transaction. So it's to analyze any transaction, okay? Because when you are getting any question, so you need to be able to analyze a transaction to know which one goes to debit side and which one goes to credit side. So let's continue with the third example we have here. Our third example is purchased washers and dryers for 25,000 ringgit, paying 10,000 in cash and the balance by obtaining a personal loan from a bank. So why the laundry equipment debit? Because it increases. Cash credit because it decreases. Bank loan credit because liability increase. That's right. Bank laundry equipment because it's asset. And asset when increase, it goes to the debit side. Cash is asset and is it decrease. So when asset decrease, go to the credit side. Bank loan is a liability and is increased. So when increase, go to the credit side. increase, so debit, so cash decrease, so credit, and bank loan liability increase, so credit. Okay, very good. Thank you. So this, like this, we can explain each transaction we are doing to know that which one is a debit side and which one is a credit side. Let's go to the another transaction. This transaction paid 1,200 cash for 1 year accident insurance policy. So we have September 4, debit, insurance expense, credit, cash. So the amount 1,200. Yes. Okay, I want just to remind you one point. When we are writing our transaction, is better and more preferred you start with the debit side than the credit side. At least the person who is reading will be so easy for him to see the follow, okay, the flow. The debit, credit, because if you did one transaction, credit, debit, and another transaction, debit, credit, so it will be so difficult for me to see which one you are writing right, which one you are writing wrong, okay? So let's take the agreement. Please, when you are answering, when you are writing in your exam or your exercise, put the debit first, then the credit, okay? Like this, it will be easy for me to see the flow. This transaction, September 10, received bill from the New Straits Times for advertising the opening of the laundry shop, 200 ringgit. So September 10, we have the debit side, which is advertising. Then we have the credit side, which is the New Straits Times, which is creditor. The amount is 200. From where we get this account's name? From the list of accounts name we are having advertising expenses and the New Straits Times creditor. So let's use the names which we are having. The transaction is withdraw 700 ringgit cash for personal use. Okay, so let's write it. Debit, we have drawings. Credit is the cash. The amount is 700. Last transaction we have here. Determine that cash receipt for laundry fees for the month were 6,200. We write September 30. The debit side is cash. Credit side is fees earned. So we have the amount 6,200. So like this, we see how is the transaction. Let's go and learn how, or let's like practice again how we can transfer this transaction to the ledger. So let's share the notebook again. Okay, in the notebook, I made another page for the ledger. Will be easy for us to write. Okay, so this is our journal page, and this is our ledger page, because it's better that you write all the transaction in the journal first, then you transfer it to the ledger. Let's start with the cash account. Okay. When you want to transfer the transaction from the journal to the ledger, you can transfer account by account, or you can transfer transaction by transaction. It's up to you. I'll transfer for you here transaction per transaction. Okay? So first, what I did, I opened T account for all the accounts we have. T account for the cash, for the laundry equipment, for the bank loan, for the user times the creditor, for the capital, for the drawing, fees earned, advertising expense, and rent expense, also the insurance expense. So we open T account for each of the accounts which we have. So let's move and transfer transaction per transaction from the journal to the ledger. This is our journal, and let's see the first transaction we have is September 1st. Debit cash 20,000, credit capital 20,000. So first we need to transfer this one. The debit cash. When you want to transfer it, okay, just 1 minute. I don't want to put X. Okay. So first we need to transfer the debit cash 20,000, and the other side is credit capital. What we do? We go to the cash account, we go to the debit side, then we write here the other side of the transaction, which is capital 20,000. So what we write here, we write 1st September, capital 20,000. So like this, we transfer this side of the transaction, which is a debit cash 20,000. We take it to the debit side of the cash account. What we write the other side of the transaction, which is the capital. Okay? Then let's take the other side. Let's continue the transaction. We need to transfer the credit capital 20,000. This one. We go to the capital account, the credit side. We write the other side of the transaction. So this is the capital account. We go to the credit side. We put 1st September, cash 20,000. So if you see like this, we transfer the both sides of the transaction. Debit cash 20,000, the credit capital 20,000. So we go to the cash account, we go to the debit side of it, we put the date, we put the other side of the transaction, we put the amount. Same, we go to the capital account, we go to the credit side, because in our transaction the capital is in the credit side. We go capital, we go to the credit side, we put the date, we put the other side of the transaction, we put the amount. Let's continue with the second transaction. This is our second transaction. September 2nd, paid 1,000 ringgit cash for store rent for the month of September. We put that debit rent expenses 1,000, credit cash 1,000. So let's transfer the first side of this transaction, which is debit rent expenses 1,000. What we go to the debit side of the rent expenses. Where is our rent expenses account? Rent expenses. Yeah. So what we go, because the rent expenses is on debit side. We go to the debit side of the rent expenses. What we write the other side of the transaction, which is cash. So what we should write here, we should write September 2, the cash, and the amount is 1,000. Then to continue to transfer the other side of the transaction, which is the cash, we go to the cash credit side because this cash is in the credit side. This is a cash account. We go to the credit side. What we write the other side of the transaction, which is rent expenses. So the 2nd September, rent expense, and the amount is 1,000. Like this, we transfer the both sides of the transaction. We do same for all the transaction. The third transaction, debit laundry equipment, credit cash, and bank loan. First, we need to go to write the first side, which is laundry equipment. We go to the debit side of the laundry equipment. What we write here we have to write those post transaction or post accounts in the credit side. So cash and bank loan is September 3rd. Cash, also September 3rd. Bank loan, the amount I think was 10,000 and 15,000. Yes, 10,000 and 15,000. So like this, we transfer the first side of the transaction. We transfer the second side of the transaction. You see here we have two accounts. So we have to go to the T account of the two accounts. Credit, cash. We go to the credit side of the cash. Credit side of the cash. We write this side, September 3rd. September, we have laundry equipment. What we write the amount here? We don't write the 25,000. We write what we already pay only as a cash, which is a 10,000. Okay, so this one you have to be careful how to write it. So because here we have compound transaction, so we don't, when we are writing the cash side, we don't put the 25,000, the whole amount. We put only what is related to the cash, the 10,000. Then we go to the bank loan. We need to write the transaction in the bank loan T account. We go to the bank loan. We have to write it in the credit side because bank loan is in the credit side. What we write the laundry equipment. It's September 3rd. Laundry equipment. And here also we don't put the 25,000. We put only the part related to the bank loan, which is the 15,000. Like this, we transfer this transaction to the ledger. You see, we put in the bank loan T account, we put in the laundry equipment T account, we put in the cash T account. Okay? If you have any question, just please write in the chat box. I'm seeing the chat box. I can answer you. So let's continue with the transactions. September 4, debit, insurance expenses, credit, cash. So let's go to the let's go to write the insurance expenses. Let's go to the debit side of the insurance expenses. Where is insurance expenses? Okay. We go to the debit side of the insurance expenses. We write the date, which is September 4. What is the other side of the transaction is the cash. So we put September 4. Cash, and we put the amount with 1,400. So like this, we transfer this, sorry, is 1,200. So like this, we write this side of the transaction. To write the other side of the transaction, we need to go to the credit side of the cash. We go again to the T account of the cash. We go to the credit side. What we write September 4, insurance expenses 1,200. So September 4, insurance expenses 1,200. Like this, we transfer the both sides of the transaction. We continue with this transaction also. This is the steps which you have to follow. When you are having any question, you have the journal and you have the ledger. You have to write all the journals first, then open the T account of all your accounts, then you transfer to the ledger. So this transaction, the debit side is advertising expense. So we have to transfer this transaction to the advertising expense T account. This is advertising expense T account. We have to go to the debit side. What we write, September 10, the new Straits Times. So we have September 10, the new Straits Times, and the amount is 200. Then to transfer the other side of the transaction, which is credit the new Straits Times. So what we go to the credit side of the new Straits Times and we write the other side of the transaction, which is advertising expense. The new Straits Times, okay, we go to the credit side. What we put, the date is September 10, is advertising and the amount is 200. So like this, we transfer this transaction. Then we need to post this transaction. We need to transfer this transaction. If you notice, when I'm transferring any side, I'm just putting a red sign next to it or like a tick next to it, just to know that I already transferred it, because we need to make sure to transfer all our transactions. So this one, September 17, debit drawings. So let's go to the drawings T account. Drawings T account. Okay, we go to the debit side. What we need to write, September 17. What is the other side of the transaction is cash, and the amount is 700. So like this, we transfer this side of the transaction. Let's transfer the other side of the transaction. Then we go to the credit side of the cash T account. This is the cash T account. We go to the credit side. What we write, the date is September 17. And the other side of the transaction is drawings and amount 700. Then, like this, we transfer this one. We have our last transaction, which is debit cash 6,200, credit fees earned 6,200. So first, let's transfer the first side of the transaction, which is debit cash 6,200. We go to the debit side of the cash. We first put the date. Date is September 30. What is the other side of the transaction is fees earned. So we put fees earned. And the amount is 6,200. Then we need to transfer the other side of the transaction, which is a credit fees earned. We go to the credit side of the fees earned T account. Fees earned T account. Okay, we go to the credit side. What we write first, we write the date, which is September 30. What is the other side of the transaction is the cash. And the amount 6,200. Like this, we transfer this side of the transaction. So those are the T accounts we have did for each one of our accounts. There is one extra step normally we should do, which is closing the account, or what we call it balancing the account. So if you can, let's say, calculate the two amounts. Can you calculate for me the sum of those amounts? Can you calculate for me the sum of those amounts? 1,000, 10,000, 1,200, and 700. Can you calculate the sum of those accounts? What is the amount will be? We have 1,000 plus 10,000 plus 1,200 plus 700. The total is how much? Anyone here? Yeah, 12,019. So let's see. I'm not yet. This one is not yet the correct answer. Huh? This one is 12,900. Can you sum for me that this amount? 20,000 and 6,200. So it will be 26,200. Okay, this is if we sum the both sides. But in the in the ledger, we cannot put both sides different. We should find one amount to make the both sides balance. So how this thing works? Let me give a little bit some space here. Yeah. So how these things works? Can you tell me what is the difference between 12,900 and 26,200? It's 13,300. That's right. So to make the both sides balance, we need to add to the credit side. We need to go to the credit side here. And we need to add this amount, which is 13,000. Sorry, not this side. Which is 13,300. We need to add this amount. So like this, our balance here. It will not be 12,900. It will be 26,200. And this is what should be, because if you remember when we were talking about our accounting equation, we said always that debit and credit side should be always equal. Also here, when we are opening the ledger, we need always to put the debit side and credit side of any account equal. To make it equal, we have to add amount to one of the sides to make it equal. Like if you are doing the weight. So you see this one is more heavy than this. So you add little bit more here to be same weight. Here also we add this amount 13,300 just to make the both sides equal. This one, when we add it, we call it balance. This one, when we add it, we call it balance. And because the debit side is higher than the credit side, so it will be debit balance. Okay? Again, When we want to close any account, we want to find the balance, we need to see the sum of each side. Then we need to add the difference between the two sum to the side which is with the lower amount. Then we call it balance. So whether it's debit balance or credit balance, it depends on which side is higher. Let's go to another account and do another one. So also here, we need to do the balancing of the two sides. So here you will tell me, but Miss, here we have nothing in the two sides. Yes, it's okay. So what we should write here? Here the total is 25,000. Here the total is 0. So to make the both side balanced, we need to add to the smaller side same amount. This is 25,000. When we add it, so we change our balance, or we change the sum of this side from 0 to 25. So like this, the both sides become equal. Okay? What we call this one, the amount which we added, we call it balance. Whether it's debit or credit balance, we see the debit side is higher. So we call it debit balance. Okay, to put a date for debit balance, it depends on when you are closing. So mostly we close end of the month or end of the year. Okay, for me, no problem. You put date, you don't put date, while you write the correct balance, I'm okay. Because sometimes we are closing our accounts in end of the month, like 31st of March, or let's say, or we close it end of the year, which is 31st December. So it's no problem. For the balance, if you put the date or you didn't put the date, I'm okay. Okay. So also here we see this side is 15,000. This side is 0. So we need to add the balance in this side, which is 15,000. Like this, the sum change from 0 to 15,000. And both sides become equal. This one, we call it balance. This one is debit balance or credit balance? This 15,000, is it debit balance or credit balance? This 15,000, is it debit balance or credit balance? Yes, it's a credit balance because the bigger side is the credit side. So it's a credit balance. That's correct. Okay, so let's continue the rest of the transactions. Okay. Also here, the sum we have here 200. Here is 0. So we need to add here 200 to change the balance to be equal with the other side. And this one, we call it balance. And actually is credit balance. Sorry, just let me make my handwriting better. So this one is credit balance. Okay, this transaction also, this account, same. So the equal here, the side is 20,000. So we need to make this side also 20,000. So we put the balance 20,000. And also is the credit balance. Also this account is 700. So we need to make this side also equal 700. So we put the balance 700, which is debit balance. Then this account we move same. So you need to do these things, the balancing to all your accounts. Okay. So here the total is 6,200. We need to make this side also same by adding the balance, which is credit balance. Okay. Then also here we have same. Also this here, the amount 200, we need to make also here same amount. Then what we do, we put the debit balance. Also for this, we do same. So as I mentioned, the closing of accounts you need to do for all your accounts which you open it. So here also that the sum is 1,000. We need to do same for the other side. So we put the 1,000, which is debit balance. And the last account we have, which is the insurance expense. So the sum here is 1,200. We need to put same here. Then it's 1,200, which is debit balance. So like this, if you see for each account, we check whether it's debit balance or credit balance. And we set it like this and we close all the accounts. So this is how we write our transaction. If you see, this is our example. This is the journal. And this is the ledger.